Hey guys, welcome to the pod team. My name is AJ.
Hello guys, welcome back to another video. This is Lex. So what are we talking about in this one?
Lex, what do you think? Do you think there's going to be a rate hike tomorrow?
I think so. I think it's gonna be another one. Uh, Inflation is not even close to be normal again. Therefore, they're gonna have to increase it at least 0.25% like they did last time. So
So,
I'm sure it's gonna go up minimum 0.25.
so with that being said, these rate hikes are going and increasing at a phenomenal rate, right? Within 1 year, we've already increased 5 points. Okay, so 5 points from last, I want to say March, we started tightening. We did it straight 5 points from March 2022 to March 2023. And now it's going to be May 2023, and we're going to increase it supposedly by another quarter point. Now, with that being said, if we do not stop, we risk inflation going up and up and up. Now, if we do pause, then we are basically going, if we do pause, then inflation goes up. If we don't pause, then these banks are failing. So
Okay.
it's like, oh shoot,
Well,
If I'm the Fed chairman, and I think we talked about it in the last one too.
honestly, I prefer for the banks to get in trouble than the people spend more money on their daily product,
Well,
food, gas.
well,
Banks. The
since
reason why I said
uh,
this because it's banks most of the time they get greedy, and they should know better than that. They should know that inflation. They should have seen this coming since 2020, but they always take a high risk when it comes to investment when it comes to do investment or make investments because they know the government is going to be there to help them out. Go ahead.
when we'll talk about banks like real soon because it's very important of what is happening. So right now the rate hikes are increasing. So that means, saving accounts, interest yields are increasing as well. CD accounts are increasing as well. Now, if you're, saving money, that seems, awesome. That you can make extra money just putting in an account and not worrying about it. Now, the shareholders, I think the stock market basically and the shareholders for a lot of companies, I think, are already assuming that these rate hikes are going to continue to rise. A lot of people are saying that if we don't pause it right now, we can break something. And things are already breaking. These banks are falling. And we had three banks already fall, and they were from California. Guess what happened today? Another
Another
bank
one.
is falling. And you want
What's the
to,
name of this one?
this one is called Pacific Western Bank, PacWest Bancorp. Uh, and guess where that PacWest Bancorp is located?
Cali.
Right on the money.
Yeah.
Beverly Hills, California. Another bank uh that is in trouble
There
from
is
my
something
guess.
wrong. I don't I don't I don't know if it's the problem, the banks or the state.
As you can see today, it had a 27% drop. More, it was down like at least 40% at one point. So when you look, like, when you're looking at this, if we go to the all-time high, this bank was at like $49. Now it's at like $6. It's following the same path of FRC. And, you know, that is not looking good. So what happened with FRC? We talked about it in the last video, and we were saying Chase is going to be ending up buying out that bank because Chase did put a lot of money into it. and it ended up winning the bid. And now Chase got bigger. It got $50 billion worth of Federal Reserve money to, secure its deposits if people want to continue taking their deposits out of FRC. Now, in the morning of, I believe it was Monday morning, the CEO of Chase came out and said that, whatever's happening, but now it's over. We should take a breath of relief that the banking crisis for now is over. And then the very next day, you see PacWest going down. And there
I
was
think he
not
made
only PacWest, it was other banks too.
I think he made First Republic problem was over, not for the entire industry. Somebody else is gonna come and pick this one up too. It might be PNC, Wells Fargo, Bank of America, Citigroup, one of these guys, because some other big companies or banks are also in trouble, like Goldman Sachs. There being some rumors that they're not doing too well.
The names of the bank are Western Alliance. That was another drop. Let's see, from its highs, it was at 122 and now it's at like 30. Another one was Key Corp. Let's look at that. Yeah, look at this. And this one dropped 10%. Then there's another bank, Zions. Zions Bank Corp. Also down another 8%. So I think we're seeing the domino effect, and I don't think it's going anywhere. So, I mean, if I was you, Lex, or if someone was you, what would you do? Sorry.
Like in terms of what? As
If
a
you
customer?
have a customer in these local banks, these are mostly located in the western side, so it's like almost all these Cali banks that are failing.
See,
Is it going to spread?
the problem with these banks is that they're small in terms of comparing those banks and Chase. Maybe most of their customers don't even know yet these banks are in trouble. And if I was a customer there and if I know they're in trouble, I'd probably be getting my money out.
And do you think
Just
it's going to spread out to the rest of like America? Like, you think it's going to go more eastern?
eventually it will, because this is not over yet. This summer is going to be a crazy summer for banks, for everybody. And you and I have been talking about when we've been saying that it's not over yet. It's not over yet. And here we go, once again, another bank. And you just show what, four banks, three, four
Yeah.
banks, that they're also borderline in trouble. So uh, to me, this is gonna continue, and the people who's gonna suffer are going to be just a regular average customer if they don't get their money out, even though their $250,000 is secure. You will get it. But worst case scenario, think about it, if that bank closes and then you had to wait weeks, days, months maybe to get your money out. Big companies, businesses, maybe small business, not a big businesses, but a small businesses who have their money in there. Maybe they have $500,000 in there. And if they're only gonna get half of that, or maybe they're not gonna have that money because, as you know, every business has payments to do every month. They need that bank account available 24/7.
Correct. I'm
So
gonna
it might
share. Go ahead.
it will become a problem. I'm sure it will. I'm pretty sure there's gonna be, you and I gonna talk about this, and we're gonna talk about another bank in the near future.
So I'm gonna take it back to 2000 right here, when this basically was like the market. This was in 2000, the QQQ. As you can see, There was a big crash over here in 2000. And, you know, once you started thinking everything's going to be going back up, it wasn't looking good. But obviously, it was a different time. It was we were in the internet bubble. But if we go forward to 2008, this is when the stock market was actually, you know, in like, I need to zoom out a little to show it better. So from 17 at that time to 49, this was called a bull run. And then it started falling around this area when basically we had the great financial crisis. So basically it ended, and then, you know, some policies came to effect, and we had the longest bull run of like basically going for 15 years. And now we've hit the brakes a little. So we're at this area where we're consolidated and we have rate hikes increasing and increasing. So if we do have another rate increase, I don't think that's enough to make this fall very bad. I think what could happen is, like, if there's a lot of banks that get affected by this rate hike, that could probably cause a black swan event, going forward. Now, also, that being said, we also have the debt ceiling coming up. So in June, around this time of area, where I feel like that's gonna, like, if you do technical analysis, you can see that, from here to here, that took 3 months. People think that this happens like in a split second, but no, it doesn't. It takes, like, you have to actually, invest your time. So from here to here is 3 months, which is a good jump. This is like a 50-point jump off of the QQQ. So it's a very good jump, but that's where we're at like a consolidating point. We're gonna hit another uh uh we're gonna hit another resistance, and we'll see if we break it or if we're gonna bounce through and probably bounce back down. And this basically area is when we're gonna find out if the debt ceiling is gonna be raised or not, and that's very important to look out for, because if it doesn't get raised, ooh, we're gonna see a big downfall, which we don't want to see. So going forward, tomorrow is a big day. We're gonna see if the Fed raises the rates. Me and Lex are saying that it's gonna definitely raise by a quarter basis point. But the important thing to look out for is that, are they gonna continue raising the rates, or are they gonna pause after a while? That's the big announcement, to see how the market actually takes it, because the market's confusing, and you have to let it, do its thing, and then I would suggest you to invest your money.
Yep, that's true. Just wait. Don't be in a hurry to possibly lose your money. And once again, guys, we're not telling you what to do, so make sure
No
you do your
financial
own
advice.
homework.
We're not financial advisors.
Yep, do your own homework. And I think this video that's what all we have for today. Please give us the like button, subscribe, let us know what you think. Let us know what else you want us to talk about on the next video or any other video. And if you think we can do better, let us know what to do. We're here to learn and be here for you guys, and hopefully for you guys to enjoy the video. Thank you, and we will see you in the next one.
Bye bye.